What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing as I do provide daily updates as well on Hemley137 on X to get you memos on what is currently going on in the current events. And then eventually I will start doing current events on here on YouTube as well. So, with that being said, let's do as the per the usual and throw this up here and kind of go over what we kind of see going on throughout the week. It's been a little chaotic over this past week as I've been out of town, so this was why this video is coming out a little bit later today. But nonetheless, last week we didn't really have a lot going on. We had GDP, we had Powell speaking, which didn't really have too much of an impact. The market's still been kind of selling off from a lot of different things going on with China. A lot of just uncertainty as far as downgrades, a lot of concern about government shutdown ultimately going into this weekend, which just as of yesterday, I'm making this on a Sunday night. So just as of yesterday, last minute, they decided to pass another 45-day extension onto this government shutdown, which essentially Moody's has essentially been uh, throwing it out there that they are willing to start downgrading a lot more than just the Big Ten banks, and the fact that the government is essentially making what used to be one of the most trusted currencies in countries to definitely put that some sort of tarnish on that with the way they've been playing these games of chicken with everybody. And essentially, the world is tired of it as we're seeing essentially China fold, and we're seeing Germany face in a recession because they've actually claimed a recession when all of us are still in the same boat, despite these historical numbers that administration and everybody's portraying that things are just so great. When there's the majority of people that are struggling just to make ends meet. So, what is the truth? And that is why we have the channel. So, being said, this going into last week, like I said, PCE came in, headline inflation is rising, but core is dropping. So a big thing we've been talking about is that gasoline is starting to really rip up because of, the only reason really why inflation came down is because we emptied the reserves, which brought down the prices of gasoline or oil down a lot to help drive down that cost, because all your goods and services that you purchase are affected by oil because of transportation costs. And the consumer is the one that will eat that cost. And so, with that being said, we move into this potentially new, potentially stagflation, as where you have high interest rates and you also have high inflation. And so, looking at something there that could potentially be it's just not been a good sign. And something we've talked about is there's a lot of different ways this thing can go because you printed 40% of the money supply, and it's not just going to be an easy overnight fix band-aid, which administration and the Fed like to just put band-aids on stuff, and that's how things are fixed. But on a debt-based system, you have booms and busts, and we are facing a bust. Yes, there will not be a soft landing, especially in this one. So hold on and to your britches, and we'll see what happens. But nonetheless, up this upcoming week, we do have Powell speaking again at 11 a.m. tomorrow. The big thing, again, it's a speech. This here again, it won't have a lot of impact unless there's something dramatic that changes. But we go by probabilities, and the probability that he's going to say something is very null at this point that is going to make any kind of real impact. But again, anytime he does speak, he can move markets. You have to be aware when he's speaking, just in case that does happen. So he will be speaking on Monday. We got non-farms on Friday. We're really looking to see what happens there. We're looking to see if there is a big adjustment in there that is going to start reflecting recessionary type numbers. And we'll see if that, because we are starting to get that, and a lot of the revisions are showing recession numbers. And something I've talked about, the algorithm is going to go off of what is essentially the headline news. It doesn't take into account all the revisions that are occurring after the fact. It's just going after the headline. So if that headline continues to remain a positive side, then the markets will stay afloat. So that's what we're looking at there. But we'll see if that starts to reflect, because there are only so many things you could do to adjust to a report before they actually start reflecting true numbers. So we'll see. When we are looking at monetary policy, again, November is the next time. The odds of a 25-point basis move are slimmer than they were, but we have a lot of big events coming up with earnings, with banks, with new core, which could be potentially rising. So that could fluctuate a lot between now and November. And we got a whole month to really determine what's going to happen with monetary policy. Core is on the 12th. So we're going to have core on Thursday, which typically comes out on Friday or no Wednesday, and now it's coming out on Thursday. Then we got bank earnings on Friday. So this is what I talked about. They're trying to strategically stage this. So if core is bad by any reason, it starts selling off, and potentially earnings are bad for banks, they could take that into the weekend and address stuff like they did this weekend, essentially with the government shutdown that they fixed it last minute. Again, this is why Moody's is downgrading everything, because it's just it's not responsible, and our government is just not being responsible, and so they are getting downgraded. And again, we will get our Big Ten banks downgraded, and I guarantee it's going to be on this cycle again, if not coming Tuesday. Tuesday will be important to watch, even though it's not listed on here. Tuesday will be important to watch to see if we get any headlines on downgrades, because we get a downgrade because of how close we're playing these situations to the chest. We could potentially get that downgrade, and that could potentially start leading to more selling. And when we start looking at the charts, you'll see that a lot of the pump that we've had, you have to first understand that a lot of people cover puts. So people are shorting the market and essentially betting that the market's going down. They cover those puts on Fridays, and so will essentially cause the market to push up a little bit on Fridays because of that. And people don't want to hold that put into the weekend. They'll just essentially buy the pump after that, and that could be what we're doing tomorrow. But again, we'll have to see there. Let's see, upcoming earnings, like I talked about. We're really looking at the 13th when we start getting bank earnings, and then we'll get Tesla and Netflix after that, the week after, and then we'll kind of see how the rest of everything is staggered out after that. And then again, we're starting to see more of a up to this. Actually, the SPX came down a little bit. Tesla has popped up a little bit more. You have to understand that we are starting to get in earnings mode. So this is why I talk about you have to understand your baselines, because as of right now, earnings that are about 2 weeks out will start pumping, aka Tesla. Your bank earnings will potentially start pumping this week unless there's some bad news. So just be mindful of that. And the banks have a lot of upward, essentially, persuasion or weight on the index. So keep that in mind. If the index starts pumping up, it's mainly because of financials. You have to remember, just a year ago, financials and value held up the market. Now financials are starting to sell off. BA is starting to sell off pretty heavy. So financials themselves can hold the market for so long, but they'll start turning if big tech and value start selling off. It's something I've talked about. If all industries will start looking the same to the downside and they'll show weakness, that's a sign of a bigger fall to come. And we saw that over the past week until the last part of the week. So this week could be important to watch, even though there's nothing really scheduled. There's still a lot that could potentially happen. That's what I'm talking about. He's talking about these black swan events. There's something very close to happening. You have to be very, very concerned about that. And it's why risk management is everything. There are certain cycles when the market changes. After we get out of this and we price in a recession, then you won't have to really worry about these big cycle changes all the time. And that's when you can put a little bit more risk on. Right now, just not the time. And because you're at the end of a bigger 10-year cycle of the debt, essentially the debt system, you're going to have a bigger downfall now. And once that's out of the way, then you'll have a gradual push up. This is something I talked about last weekend, looking at the SPX chart. So again, we're going to see potentially more. There's not going to really be any big events. So essentially SPX number won't hover too far from here unless for some reason we start getting major selling because of headline news. You start to see more of an upgrade in, essentially, when you start getting like 2 weeks out, you see more of a bump in these individual stocks. And then when you have bigger events, then this goes way up, and then the individual stocks go way down. So that's something you have to watch. And so this week, this week is kind of in between. So just depending on the stock, it could be okay to play either one. You're just kind of really looking to see if there's a big event that moves the market and then take advantage of that one. But ultimately, next week, you'll start getting more of a bump here in these individual stocks, and then it's better to just wait till after earnings to play those. This is why after earnings plays are the best to do, because they don't price in so much, because sometimes they price in so much that you can't make anything off of options. So it's useless to play options. And majority of the time, it's been useless to play options and play equity, because they've priced in a whole lot because of what's going on in the market. And so much chop in the market that options almost become useless at that point, unless you're playing iron condors or anything like that. But you could potentially take advantage of the market that's trading sideways as well. Something else you can do with something like Tesla when it gets in positions where it doesn't move a lot. So let's take a look at technicals. So as of right now, this week, if you really want to go higher, it needs to break the 43.43, and then I think if it starts getting earnings mode, could potentially see that 4600 again. Otherwise, if it does break below that, then we're still really watching that 4200. If it breaks 4200, I think we're definitely going to be going lower. But this is something I've said. We have to see how this is going to play. It could be a break and a retest. It may not so much be here on this chart, but when we start getting individual charts, it looks more like a break and a retest. This looks like a clean break and a retest. So we'll see if we can open up above that 4340 or not tomorrow. But that is ultimately we're really kind of looking at there. And then you have Bitcoin. So Bitcoin's been pumping a little bit. It's essentially kind of held that 25K mark. Again, it could just be playing the range. It could get a nice little pump to 31. But we're definitely going to have to watch and see what occurs over the next couple of weeks. I think October is going to be the real test of the month. If we can get through October, I think the rest of the year could be potentially okay. And then maybe we get a bigger sell-off around that February, right after essentially the Christmas rally could potentially happen. So those are all the kinds of things we really need to be watching there moving forward with that. And then Tesla is just really kind of chopping. I don't really expect Tesla to do much, but stay in this range, essentially roughly around that 2338 mark to about that 300 mark. I think it's going to continue to chop here once it actually has earnings. Maybe it breaks either up or down from that point. We'll see. But I think that's what it's kind of doing. I don't really expect it to do too much. It's had big runs up to this point. So, I mean, you had this big rip up ever since its earnings, then it sold off about 30% and little rip up. So maybe looking for a bigger move here coming into next earnings. So we'll have to see there. Palantir, again, they got big contract news. So they had a huge rip in the week. So just really kind of watching it. You could say it's a head and shoulders. I don't like playing that pattern, but again, we'll have to see. It still needs to break the 20 to go higher. I don't like these big gaps like this, though. I'd like this to be more bullish to at least come down to the 10, and then start breaking its way back up. I'll be definitely ready to buy at this range if it does do that, but we will have to see and continue to move from that point. So keeping that, like I said, on watch. And then we'll look at the regulars. BA. Now, BAs has been selling off pretty heavy lately. It's testing that bottom range. And like I said, the fact that value is starting to sell off is not a good sign. So if BA can't hold this 192 mark, it could be very, very concerning. But again, if it breaks that, then you pretty much got a big jump down to the 164, and then it breaks that, and then the 117. So if there's no strength in tech and value starting to go down, that means financials can push up a little bit, can push the index up for a little bit, but it's going to start struggling, and then it's going to need the help of the other industries. And if they can't help, they'll all start selling at once. So this is why risk management, again, like I said, really matters, and you need to know the cycles because you don't want to be putting big money on a market like this that is very indecisive and swinging back and forth. Unless it's at 52-week lows or 52-week highs, that's a different question. But the fact that it's just been really choppy, you're not really moving in a big range. So you can play intraday pretty easy when it's stuck in a range, as long as it's a big range and not a small, tiny range. But we'll see what happens with BA coming into it. So it fell all the way back into this range. It needs to hold. I could see it potentially trying to pump one last time. Tag the 220 and then make new lows. Could be a possibility, but again, we'll have to see what happens there. And then you got JPM. JPM earnings are just about a week and a half away, 2 weeks away. It definitely needs to hold again this 141 mark. If it does break that, again, you're going to start retracing these gaps that I talked about for a very long time. They said eventually they would fill. Maybe now is the time, but if they are, they're definitely going to have to hold that 140 mark and also that 122 mark. So we'll definitely have to see what happens there as well. But I don't want to make this video too long. I've done this video multiple times, and again, there's not really a ton of information. We're kind of just watching headline news right now. And like I said, downgrades we'll see how much of an impact that does have in the market. It could start selling the market off. So just be mindful of that. If it doesn't sell the market off, that means the market's in earnings mode. And so, like I said, we're floating around earnings mode. So at any point, the market just start pushing up. So there's not a lot of new bad news. So then the market's going to start pushing back up. Will it break new highs? I think it's very doubtful because there's still a lot of uncertainty right now. And there's enough range to kind of price in earnings on individual stocks. But again, we will wait and we'll see what happens from there. So if you made it this far, I do appreciate you. Go ahead and drop a like. And until the next video, I'll see you guys later.